Dear students, in this video we are going to see another important part B question in the chapter Business and Profession in the subject Income Tax Law and Practice 1. Compute business income of the following detail. Profit and loss account is given to you. Gross profit is 1 lakh, by commission 10,000, by rent received 50,000. So to general expenses 10,000, to salary to staff 12,000, to purchase of typewriter 10,000, to advertisement paid in the form of cash 25,000, to interest on capital 3,000, to net profit is 1 lakh. They gave the profit and loss account, but we need to reframe as per the income tax rule in order to pay sales tax to the government. So net profit is 1 lakh, and remember the purchase of typewriter, it is a capital expenditure. Capital expenditure should be shown in the asset side of the balance sheet, not in the P&L account. So we have shown, so it is disallowed. We have to add purchase of typewriter 10,000. Then advertisement 25,000, but it is paid in the form of cash. So it is disallowed. Any expenses exceeding 10,000 should be paid only by check, not by cash. If you pay by cash, it is fully disallowed. Now advertisement 25,000, so exceeding 10,000, but we paid in the form of cash, so it is disallowed. The entire 25,000 should be added. Then interest on capital is a personal expenditure. Then remember that purchase of typewriter is an asset, but for the asset you can calculate depreciation as per the Income Tax Act. For typewriter, the depreciation is 15% rate of depreciation. With this information, we go for solution. Computation of business income. Draw 3 column, particulars, inner column, that is amount, then outer column, that is also amount, outer column. The format of business income is net profit, add inadmissible or disallowed expenses, then give some gap, minus expenses allowed but not debited, give some gap, then last format in non-business income credited. Now write net profit is given in the question, 1 lakh in the outer column. Then inadmissible expenses, come here. General expenses is a business, that should not come because it is allowed. Then salary to staff is business expenditure, it is also allowed. Purchase of typewriter is a capital expenditure, this is disallowed. So purchase of typewriter 10,000. Then advertisement, it is allowed but we paid in the form of cash. Because of that it is fully disallowed, because any expenditure above 10,000 must be paid only by check, not by cash. Here we paid in the form of cash, so the amount is fully disallowed. Then interest on capital is a personal expenditure, that is 3,000. Now 10, 35, 38 become 1,38,000. Then expenses allowed but not debited. For tangible asset, you are eligible to calculate 15% as rate of depreciation. So depreciation on typewriter 10,000 into 15 percentage. I'm getting 1,500 that can be deducted. So 138 minus 15 become 1,36,500. Come to the credit side. Commission is a business income. That should not come here. Rent received. It belongs to income from house property. It is disallowed, non-business income. So write it here. Rent received 50,000. That's it. So deduct 50,000. So 136,500 minus 50,000 become 86,500. This is the business income as per IT rules. Thank you.